Welcome to Market Movers. I'm Dave Hightower, joined by Dan Bosse. So we've had an early October freeze. Is this going to nick production into the report?
I think so, David. As we look towards the Dakotas in particular, we're doing a resurvey up there in terms of what the snow potential, that snowstorm in October, really caused for damage. So harvested acreage will be looked at, and we think it nicked production a little bit. Ag Resource is looking for a U.S. corn yield of 166. We're looking for a slight decline in soybeans to 46.5 bushels an acre.
And Minnesota, North Dakota, 3 and 4 in total soybean production, so not insignificant.
No, not insignificant at all. And so it's worrisome to get those crops out. Fields are saturated. They're waiting for things to freeze up to get combines and support things.
So another important factor, outside the grains, big demand destruction off of the trade, economic slowing. Do we put it back in? Seem like we're making progress on that front.
Well, we are making progress between the United States and China. We're phasing deals, and it looks like we're going to get a phase one deal completed maybe during the month of November. That'll be somewhat after the report. But the market will start to look forward and think about that $20 billion of potential demand that could be forthcoming. Soybeans would be the crop that would go into most, but maybe there's even a little bit of grain demand in there in terms of corn and wheat somewhere down the road.
And just on a flat basis, 38 cents down in the corn market, $1.20 down because of the demand destruction. So a bounce in the market's not unlikely.
Yeah, I think we're going to see a bounce, but as I stand back from it, what really bothers me is U.S. corn sales to date are worse than they were back in 2012. That year, we only exported 730 million bushels of corn. So somewhere along the line, David, we really need to kick this export market into some kind of overdrive to get numbers where they need to be to reach USDA's forecast.
Exactly. So before we dive into our trade discussions, I'd like to point out that these trades are examples and not recommendations or advice. How do you see?
Well, David, my trade example, I'm looking at a corn spread. I want to buy a July 20 corn futures, sell a December 20 corn futures at a 4-cent July discount. Now, the market today is at a 3 cent, so I'm giving myself a little bit of room to get in that trade. I'm looking to take profits at an 8-cent July premium, and I want to risk 4 cents on the entire spread.
Good strategy. Long futures at the market, covered with the short. Dan, as an example, I'm looking to catch up on lost feed demand. I want to buy the March soybean meal at $310 with an objective $336, and I'm willing to risk to a close as low as $305.
I like that trade, Dave. You know, the Chinese meal trade last week just exploded. There's a lot of end users that just don't have enough coverage on meal.
So maybe we'll get out from under the macro cloud, get a little bit of lower supply and a rally in grains. So Dan, on Market Movers, we like to educate new folks just tuning in, and this time we want to talk about harvest problems, quality, quantity, and maybe delays.
Boy, they're everywhere, David. If you look at the harvest pace, we're maybe going to be 60% done on beans, 35% done on corn as of this week. As I look forward, the weather forecast has snow and cold in it. It's going to continue to eat away at this crop, but it's really eating away at the crop in quality. We think that test weights for corn will be down, soybean splits will be up, and what this really means is that there will be some discounts for farmers, maybe some appreciation in basis, but it's never good for the market in terms of being bullish when you have off-quality crops. So I'm a little concerned about that further down the road.
And the USDA's been slow to realize some of the other problems. So thanks, Dan, for your insight. We'll keep a close eye on the market. Thanks for joining us on Market Movers. I'm Dave Hightower. Trade well and trade smart.